Hey everyone, and welcome back to the channel where we demystify the markets and shine a light on unique trading setups. Today, we're diving deep into a fascinating stock that's popped up on our hard-to-borrow screen at JEM, or 707 Cayman Holdings Limited. We'll break down why this stock is catching attention, what hard-to-borrow actually means, and the potential dynamics behind a short squeeze. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo/info card. Let's get straight to JEM 707 Cayman Holdings Limited. This company operates in the consumer cyclical and apparel retail sector, known for selling and distributing fashion apparel products like denim, athleisure, and outerwear across Hong Kong, Europe, North America, and the Middle East. Currently, JEM has a microcap market capitalization of just $4.01 million. Looking at the recent price action, it's been a bit of a roller coaster. Today, JEM is down minus 28.35%. However, zooming out a bit, it's actually up plus 23.66% over the last 5 trading days, and a significant plus 66.67% over the last 30 days. Volume-wise, today saw 15,016,300 shares trade hands, which is a massive 1.9 times its 30-day average volume of 8,087,346 shares. What is cost to borrow and why it matters? Before we get further into JEM specifics, let's understand the core concepts: cost to borrow, or CTB. Show animation of short selling process. When you short a stock, you're borrowing shares from someone else, selling them, and hoping to buy them back later at a lower price to return them. The cost to borrow is essentially the annualized interest rate you pay to borrow those shares. It's a daily rental fee. Why does it matter? A high cost to borrow indicates strong demand from short sellers to bet against the stock, but more importantly, it often signals a very limited supply of shares available to borrow. When borrow fees start to skyrocket, it tells you that the market is struggling to find shares for new or existing short positions. These fees can even exceed 100% annually, which means short sellers are paying a significant amount just to hold their position over a year. Why this stock is hard to borrow right now. Now, let's talk about why 707 Cayman Holdings Limited JEM caught our attention. Show CTB chart for JEM. The cost to borrow fee for JEM currently stands at an astounding 895.4% annualized. That's nearly 900% per year just to borrow shares. Even more compelling is the CTB momentum. It's exploded by plus 795 percentage points over the last 5 trading days. This isn't just high, it's rapidly escalating. Highlight: 895.4% CTB. The availability of shares to borrow is also incredibly tight, with only 95,000 shares currently available. This rapidly shrinking supply, combined with the exploding fees, is precisely what flagged JEM on our hard-to-borrow screener. Our internal composite squeeze score, which weighs factors like CTB level, momentum, borrower supply, and technicals, gives JEM a score of 43.5 out of 100. This suggests a moderate but not extreme potential for a squeeze. One data point we don't have is the estimated float size, which could impact the overall squeeze potential. Remember, a high cost to borrow doesn't automatically guarantee a squeeze. It can also mean that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. Squeeze mechanics explained. So, what happens when a stock like JEM is hard to borrow? It means there are very few shares left for short sellers to lend. If the stock price starts to rise, driven by positive news, strong buying, or even general market sentiment, short sellers face a double whammy. Their positions are losing money, and their cost to borrow fees are eating into their capital daily. At a certain point, some short sellers will be forced to cover their positions. Covering means they have to buy back the shares they initially borrowed and sold, to return them to the lender. This forced buying pressure then drives the price even higher, trapping more short sellers, who then also have to buy back shares. This chain reaction, a sort of domino effect of forced buying, is what we call a short squeeze. It can lead to very rapid and explosive price movements in a short period. Dilution risk check. An important factor to consider in any squeeze thesis is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. We're happy to report that for 707 Cayman Holdings Limited, our check found no recent diluted SEC filings like SMINUS-1, SMINUS-3, or 424B in the last 90 days. This is generally positive for a short squeeze thesis. Why? Because dilution can quickly undermine a squeeze by flooding the market with new shares. This increases the supply, making it easier for short sellers to find shares to borrow, which can suppress borrow fees. It also adds selling pressure to the market, as new shares hit circulation, potentially negating any upward momentum from short covering. So, for JEM, the absence of recent dilution is a constructive data point. Let's quickly reiterate our important disclaimer. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For JEM 707 Cayman Holdings Limited, given its current setup, what should you watch for? Continue to monitor that cost to borrow fee. Any further dramatic increases would be significant. Keep an eye on the number of shares available to borrow, which is currently very low at 95,000. A further reduction would be a strong indicator of tightening supply. Look for consistent upward price momentum on high volume, contrasting with today's minus 28.35% drop. While today's volume was high, it was on a down day, so a reversal with equally high volume on the buy side would be noteworthy. Also, pay attention to any news or fundamental developments regarding JEM apparel retail business that could trigger a sustained buying interest. So there you have it. JEM 707 Cayman Holdings Limited is a fascinating stock with a rapidly escalating cost to borrow of 895.4% and an extremely tight supply of just 95,000 borrowable shares. While its composite squeeze score is moderate at 43.5, and it saw a significant drop today despite recent positive weekly and monthly gains, the underlying hard-to-borrow metrics are certainly compelling. Remember, high cost to borrow doesn't guarantee a squeeze, but it does highlight a very unique situation in the market. Always do your own thorough research. If you found this breakdown helpful, please hit that like button, subscribe for more unique stock insights, and let us know in the comments what other stocks you'd like us to cover. Thanks for watching, and we'll see you in the next video.